the quant because you don't trust it. She said, I trust it because I wrote it. And that made sense to me. She's the author, right? She's the one that created it, so she absolutely trusts it. So she said, hopefully, when she introduced the quant to us, she said, hopefully this. All right, couple features about the quant. When you sign up for the quant, there is a daily trade room. Okay, so very similar to Barbara's trade room, you'll have one that's dedicated solely for the Segredo quant. Now, I strongly recommend that those of you that want to get really, really good at and use to your advantage the quant, to go to these. And it's real simple to sign in. You just click on the one that you want, just like you did for the webinar tonight, enter your credentials, and then you're set. So I need to move some stuff around here. Bear with me. If you look at over here on the left-hand side, you have a section which is called My Watch List. So what you see in front of you right now is my watch list, literally. And what we have is the Dow Jones, the DJI. We have the dollar tick, which is pretty cool. You get the dollar tick for free. It comes with Segredo quants. I have the Aussie dollar in the 1 and 5 minute. I have the European in the 1, 5, and 15. And then I have the Japanese yen in the 1, 5, and 15. Now, what I'm going to do is, what I want to show you first is what one of these charts looks like. Okay. So let me do something here. So there's all kinds of ways that you can personalize this, okay? Over here, you can zoom in and out in terms of 1 hour, 3 hours, 6 hours, etc. Current looks like we're on about a 3+. You can also go to a lighter. I don't actually like the lighter, so I keep it on dark. And then very similar to the cross-tag feature in Shadow Traders, you have a tooltip. And you'll see the tooltip does is it gives you information from each particular bar. The open, the high, the low, and the close, and then of course the sequence. Now the way that the quant works is it works in numerical sequence. The sequence starts at 1, sometimes it starts at 0, but most of the time it starts at 1, and it can go to as high as 8. I even saw a 9 earlier today, and then it starts over. So if you look over here, you've got 1 through 7, and then it starts over. Obviously, the red bars are similar to the red bars on the NinjaTrader charts, and the green bars are similar to the green bars that you're already used to. This gray line represents the 13 EMA. And then this bar connecting these bars is the HMA, which is the whole moving average. And you see it changes because that's the whole shows trends, or it shows direction. Down below is an oscillator. I use the oscillator to, really use it, and by the way, you can expect for me to borrow some of Melanie's vocabulary, so I use the oscillator for matchy-matchy. And I'm going to show you exactly how I do that when we work on the replay examples. But so the oscillator, it also follows a numerical sequence, and it matches the one above. Now, the colors have significance. I'm going to show you those rather than explain them to you now. I'm going to show it to you in relation to the perfect trade so that it makes sense to you. Let me take a look at your questions real quick. What is the period of the HMA? It's a 14-minute HMA. How many trades do I take in a day? I take 2. I find that if I do more than 2, I start to mess up. And so Melanie said, cut back the gradient, and once you've mastered a few months at 2, then we'll talk about doing more. Good question. Someone just asked, what does a star signal mean? And the question is, it's not operable yet. Be patient. Barbara says it's almost close. So right now, if you're using the quant, please don't give this star any significance. Question, what is JYU? It stands for Japanese yen. And by the way, I'm on the 5-minute version. One other adjustment that I'll show you. I'll just move this down here. Is you can adjust this. If you don't like the oscillator, then you can go just to candlestick. And if you don't like the candlesticks, you can go just to oscillator. But the Segredo shows both of them. Ray wants to know, do I trade off the 5-minute chart? Yes, I do. I'm one of those guys that hacks with the 1 minute. I found it, for me, to be a very neurotic, it's a neurotic chart. I dig too much into the significance as to what's going on, and it paralyzes me. Bob has asked, do I utilize or follow Melanie's 3-6 tick profit strategy? I do, only when I'm doing a perfect trade and the 1 and the 5-minute are aligned. When the 1 and the 5-minute are aligned, which I'm going to show you, that means that there's more agreement, and it means that it's going to go for more ticks. So a 6-tick trade is not unreasonable. If it's not synced up really well and it's not real tight, then I only go for 3 ticks. So with that being said, let me take a look at my agenda here. I want to make sure that I'm not rabbit trailing. All right. So this is the quant, or at least this is the chart aspect of it. And then over here you have a radar. Honestly, I don't put too much significance into this. That's not to say that you can't. I've tried to, over the years, limit myself to what I'm looking at in the moment. You know, these phases, they also have significance. But like I said, I try to limit what I'm looking at in the moment. And for those of you that want a more simple approach, I'm going to help you do the same because, you know, Melanie has said over and over and over again, and it only took me 2 years to listen, is that you got to conquer the less before you conquer the more. And that finally made sense to me. I just got to the point where I was like, you know what? I'm tired of looking at all of this stuff. I just want to be able to look at a few different things, work with the indicators that I trust, and enter the trade. I mean, I'm sure that some of you can actually, you know, really relate to that. You know, some of you possibly have too much on your charts. It could be possible. I've really stripped mine down, and I've given an honest effort to try to use some of the new ones that came out. You know, when the CT indicator, the clear trade indicator came out, I thought, cool, this makes it brainless for me. All I got to do is wait for this CT to pop up on my chart. But what I found is I was still looking at the rules for a clear trade and other items, and it just got to the point where I was like, man, I've got to make this simple. You know, I liken it to, and this may not be a good analogy, but you know, when I do talk to those who I'm willing to talk to about trading, I say, you know, it's kind of like being a hunter, if you will. And by the way, if you're a PETA fan, please don't attack me, but I'm not a hunter, but this is a good analogy. I'm sitting in a deer stand. I know what the deer looks like. I know how to load my gun. I know how to aim it. And when the deer comes across, and the analogy there is when your trade shows up, it's just time to pull the trigger. So tonight, I'm just going to show you some bare bones minimums. And then, like I said, if I get invited back, we'll start to get really, really fancy with this. We'll turn all the trades in, the charts inside out. And some of you are already going to do that. There are people in this room right now, and this is what I love about this group, that are already playing around with things and innovating off of what Melanie has shown them, what Cheryl has shown them, and what Barb has shown them. I don't know if you can innovate off of what I'm going to show you. I mean, you certainly have license to, but let's take a look. Yeah, I've covered everything on the quants. Okay, good. Now let's jump into the criteria for the perfect trade. Now, I'm going to leave this up here for a minute. I'm going to expand it. By the way, I'm caught in a catch-22. I'm trying to limit what I show you so that you can assimilate it, but I also want to make sure that you can see it. So give me some Y's in the window if you can see the rules that I just put up in the center of the chart, or in the center of the screen. All right, so at this point, what I would recommend is that try and take a screenshot of this while I have this up real quick. But as you can see, there's just 3 things that we're going to look at for doing a perfect trade in the moment. I'm going to read these off. I'm not going to go word for word, but then I'm going to show you what it looks like on a chart so that you get a physical representation so that it looks more real. And then, of course, as we do a couple of replays, you'll really start to see in its simplicity what it is that you're looking for. But the perfect trade really is a perfect trade. You know, it's interesting that they named it this. I haven't ventured to guess as to why, but I like the name of it. The reason that it's perfect, at least for me, is because I'm kind of a trend trader, and I'm kind of a counter trend trader, and I'm kind of a scalper, and I kind of want to, you know, see if one of these things will rip for 20 ticks, right? And it's scary, but you know, we got to keep it simple, right? So what we're looking for in the perfect trade, and essentially what you're looking at, is the trend has been going one way, and now it's tuckered out. It's going to start changing direction. It's the whatever goes up must come down rule, and vice versa. So what we're going to take a look at, and what you need in order to be comfortable entering a perfect trade, is we're going to use the 1 minute and the 5 minute charts. Okay, and what you're looking for on each of the charts is for the MACD to be below the center line and trending towards the center line. I'm really glad that Barb put this in, because it's great to know when to go in, and it's really good not to know, or to know when not to go in. So if the MACD is above the center line on the 5, but it's below the center line on the 1 minute chart, or vice versa, don't take the trade. We're out of sync. She says in this case, only do gap closes. I will not be showing gap closes tonight. I'm only going to show you the perfect trade. And then in your other panel, the other thing that you're looking at are the 3 stochastics, which stochastics measure overbought and oversold in the market. And it's going to be really obvious when I show you. You're looking at the 3 stochastics on the 1 and the 5 minute to be coming up from the 20 line and towards the 80, but not above the 80. And then in terms of your HMA is going to turn green on the 5 minute. It'll already be green on the 1. And in some cases, it's already green on the 5, and now it's turning green again on the 1. Now here's a really good note. And this happens after the market's been going in one direction for a while. But the tighter together that you have your 3 stochastics when they're at the bottom, let's say that, you know, where my mouse is right now is the bottom, and the 3 stows are together, and you start to see them come up, and if the star line was the 20 line, they're coming up together, man, that's hot. You got to get excited about that. But hopefully you were already excited because you saw that the market was going in one direction for a long time, and you knew what goes up must come down. It's going to change direction, so you start building up in anticipation for that. So there's a question. Wendy wants to know, how do you take a screenshot? You may not have this on your computer, but you're looking for snipping tool, and you click on snipping tool, and then it asks you to draw apart parameters using your mouse, and then you'll click on it once you take a picture. So you'll just make sure that your parameters stretch around this window right here. Uh-oh. And then finally, the third set of criteria. And this seems like a lot when you first look at it, but I promise you rather, when we look at this chart later, it's going to all come together it's going to be very obvious and very easy to see. But on the Segredo, on the quant, you're looking for a 1 or a 2 or a 3. And for a long trade, you're looking for green numbers and a yellow or green oscillator with a green HMA. Now, where she says should see the silver moving average cross the HMA, that has become a personal preference for me. So I like to see the HMA crossing that silver moving average. And again, let me see if let me give you a good example here. Right here. It's a green 1. Here, let's pull up the... So for Segredo, a 1, a 2, or a 3 in green numbers and a yellow or green oscillator. So right here, you had your first 1. It's getting close to the HMA. Right here, it's basically crossing. 2, it's definitely crossing. And these are yellow. So that's what you're wanting for long. You're looking for green numbers and a yellow oscillator or a green oscillator. And you can enter on 1, 2, or 3. Because I like to enter quickly, I typically don't wait for 3s. I like to get in and take advantage of the momentum that's there. So as you can anticipate, the rules are the same for long as they are short. And so let's take a look at that. Don't worry, we'll come to the data that's above that in just a minute. So for the short trade, the MACD, so let's just go to a chart instead of a Segredo chart. What do you say? All right. I'm going to go over here to my 1 minute. This is my 1 minute chart, and this is my 5 minute chart. So you're looking for the MACD, if you're going short, to be above the center line and trending towards the center line on the 1 and the 5. So obviously, these guys right now are out of sync, so there's nothing to do. You want them in the same direction. And again, right, so basically the rule is, if one is already through the center line and the other one isn't, then you're not in sync. If one is above and it's below on the other one, you're out of sync. Nothing to do. Sit on your hands. The 3 stochastics down below, on the 1 and 5 minute, you want them coming down from the 80 line, which is this line right here. See how it says 80 or close to it? And you want those guys coming down, and the tighter, the better. And you want matchy-matchy. So you want matchy-matchy on the stochastics on the 5 and the 1. And you want matchy-matchy on the MACD on the 5 and the 1. And then obviously the 5 minute chart doing something similar to what the 1 minute chart is doing. All right, let's take a look at the questions here. Christine has some advice. If you don't have the snipping tool, you can hit Control-Alt-Print to copy the screenshot as a picture, and then you can paste the picture in a Microsoft Word document. Thank you for that, Christine. I sell IT consulting to those that use Oracle software, and I can't figure stuff like this out. That's pretty good. Great question about the runaway stow. We'll take a look at that. If we don't get to that tonight, we'll definitely get to it. But a runaway stow is a runaway stow. And what that means, a runaway stow is when this occurs. Let's minimize this. Let's see if I can show you one. Okay, so I'm not getting what I want in the amount of time that I want to get it. So basically what a runaway stow is when this black stochastic, which is called the stow 20, takes, let's say if all three of these were up here by itself, but only the black came down by itself, well, if it doesn't have over here, then you're out of sync anyway. So that just tells you to sit on your hands. Don't take, don't do anything. There's nothing to do. Bud, good question. What time do I trade the 6J? As soon as I get home from work, which is 5:15 Central Standard Time, I turn on the charts and it gets going, and it trades pretty well until about 11. It gives me a couple good moves. Um, how many quant charts are you using for the perfect trade example? Good question. I just used the 5-minute quant. I pull this bad boy up and I take a look. Is there a 1, a 3 if I'm going long? And do I have a yellow oscillator? Great. Then click. And if I'm going in the opposite direction, I'll share with you that you're looking for red numbers and blue oscillators. So I'll pull up a couple good examples. Oh, James, that's pretty cool. Yeah. So James lives in the world of Oracle as well. Paul, thank you. Let's take a look at something real time. There's evidently a real move, really nice move happening on 6A right now. As I look at this, I'm getting excited because this has been going to a direct a while, and we start to see what you could call momentum divergence. It's going to tire out. Now, will this cross? I don't know. The cool thing about this trade and the secret to this perfect trade is that you just need to wait for it. You just need to wait for all the things to show up, and then you enter the trade. So what I want to do now is I want to take a look at the 10:15 run-up that occurred today on the euro. Let's see if I can find that real quick. And by the way, I'm entering, if you look at my time, I'm an hour behind the market. I decided not to keep everything on New York time because I like to know the time of where I'm at. But before that, let me just look at something really quick. Let's close that. What I'm going to bring up is the euro chart, and what I'm looking for is the perfect place to go back to show you the example at 10:15 of the run-up. Okay, so just so you know, the quant, this is real life 10:15. So what I need to do on my charts is go to 9:15. And here it is right here. Or at least, we're going to pull up the indicator charts and it should show up. All right, I'm just waiting for the charts to load here. While that's happening, I'm going to attempt to answer some more questions. Okay. A question: are you trading the yen as a forex pair or as a future? As a future. How often does the perfect trade show up? It shows up very often. Where you're really going to be able to find, if you're looking to, you know, if you're feeling limited because it only shows up twice a day, I guess my best advice to you is get comfortable with this criteria so well that you could trade it on the euro, the Aussie dollar, the yen, oil, gold, whatever. Because the cool thing about the perfect trade is that, and the reason that it's such a perfect trade is because all you're doing is contributing to the algorithm that naturally happens. So, um, that's gonna occur quite a few times. All right, so here we are. We're at 10:15. It's time for the 10:15 run up. And if we look at, and let's just move this right in the way. Let's pull up the criteria. We're looking for a long trade because it's the run up. What we're looking for is the MACD below the center line and trending towards the center line on the 1 and 5 minute charts. This has officially cleared the center line. It's not touching the histogram, but this one's above. So personally, I'm out. The reason I'm out is I don't like to lose money, and I like to force the market to put everything in my favor. However, the oddity is that if you look over here on the quant, it shows a 1, and this is some good tick movement. You could get 3 ticks here, but why risk it? Look what eventually happens. It goes up. And I'm going to go to a different time. What I want to do is I want to show you this trade right here. This is a great short entry that occurred at 8:35 on the euro. So let's take a look at that one. And in the interim, someone asked me to put this back up. So there's that. I'm going to move this to the top left corner so I can maneuver. While we're waiting for this to respond, I'm going to answer some more questions. Please define perfect trade. The perfect trade is essentially a counter trend trade. It's at the very last moment when the market's been going in one direction and it's finally going to go in the opposite direction. It's a gap close that continues on through. It's a reversal. Um, Good question. Do I start trading at 6 p.m. Eastern or my time? 6 p.m. my time. Good question. Do I use fractals? I don't. In fact, let me show you. If you look at my chart, it's extremely simple. The reason, again, that I keep it simple is because I was one of those guys that if there were fractals on here, I would have also taken that into consideration, even when the rules only suggest that I look at 3 things. I don't, I just, so what I have are the bars, I have the HMA, I made it really thick because I want it to be nice and obvious. I like obvious. I use the SMA regions. This is, y'all are gonna laugh. Feel free to laugh, because it adds color. I like it. I already know what direction everything's going in because I've been following the flow. So, I don't look at this and go, okay, cool. So we're still green, because again, I'm focused on those three things right there, right? I'm focused on what is this MACD doing? Are they in sync? What are my stochastics doing? Are they in sync? What color are my HMAs? Are they in sync? Are my stochastics tight? And now finally, let's take a look at Segredo and see what he says, or she says, and pull up my dome, enter the trade. Down below, I have the colored MACD, again, just for pure aesthetics. I made the histogram thicker. The reason that I did that is because I want it to be clear when this guy clears the histogram. I want to know, because I used to be a gap trader, and when I was a gap trader, I was looking for this to clear. And then the only other thing I have on here are the stochastics. I have the 20, the 50, and the 100, and they're all just basic settings. So I don't know if this will help you, but Melanie showed this one time and it was really helpful for me. So I'll share that. Hello, not what I wanted to happen. All right. There was a question earlier. I remember seeing, how many screens do you use? You're looking at it. Just one. So these are what I have on my chart. Stochastics, right? You see the 5, the 100, and the 20, or the 50. The 5, the 20, and the 50. I have the colored MACD. I have a bar timer. I have the SMA regions for aesthetics because I like the green, I like the red. I have the so what this indicator is it shows you when each of these moving averages here become support and resistance. I like to see momentum. I like the pivots, and I like the HMA. And then finally, I have the slope box multi because I want to see, which is right here. This shows um, the degree of slope on your 13 moving average. And that's it. And so what you see on my 5, you'll see on my 1 minute. All right, so now, good question. Is my HMA set to 14? Yes, it is. So I've made no modifications to my HMA or any of the moving averages for that matter. Okay, so now let's take a look at this. Because I think I see a perfect trade here. And again, this is 8:35, okay? It's 7:35 Central Standard Time, and if that causes any confusion, I apologize. But this is 7:35 Central Standard Time today. What we're looking for is a short trade criteria. We're looking for the MACD to be above the center line and trending toward the center line on the 1 and the 5. Let's see if we have that. And I know I'm going a little slowly. This will pick up, and we'll be able to fit in a whole lot more as I progress again if I'm invited back. But as you can see right here, this is starting to come down. The MACD, the lines are starting to converge instead of diverge. They're not getting wider, they're getting thinner. I like where the stochastics are at. If we look over here, the MACD is trending towards the center line here. So we do have matchy-matchy. Then next we look at the three stochastics on the 1 and the 5 coming down from the 80 towards the 20, but not above the 20. Some of you are going to wait for all three of these to come down. That's perfectly fine. I've done that myself. I stopped here because on the quant it shows us a 1. But you can wait for a 2 to come in, and I'm sure by the time the 2 comes in, this third one here, the 100, is going to be bent in your direction as well. So we're going from the 80 to the 20. So this is a check. This is good. And we're not at the 28 over here, and those are trending towards the 20. So that's good. So we've got matchy-matchy here and here, matchy-matchy here and here. We've got a red HMA on the 1. And on the 1-minute chart, essentially what you're seeing is the 1350 cross getting ready to take place. And over here, we've got a gap close on the 5 that's going to continue and more than likely be a reversal. At least it will come down and hit the 20. It may bounce back up. And I'll tell you, just as a point of caution, you want to be concerned with the angle of the 20. Okay, Melanie's brought it up countless times. I've been burned by this countless of times because of my impatience. If it were to stay like this, and perhaps we'll be able to see this in this trade, this price action is going to come down, and by the mere angle of this, it's going to repel it, it's going to fight it. If this 20 SMA were flat, like the 13, then it would receive the price action better, and the price action would be able to penetrate this much easier. So let's enter a trade. Enough talking. So here we are, it's 10:35. No, it's not 10:35, it's 7:35. I'm going to give you manual entries just like Melanie does. And let's watch this happen. Now, because this is a counter trend, I want to give everybody a warning, and it's a word of caution. This is going to bounce up and down on this for a while, and so sometimes it's going to cause the price to go against you. That may make you nervous. What I would encourage you to do is to trust in what you see in the indicators, as well as the Segredo quant, and allow this trade to benefit you. Allow this trade to give you profit. I'll admit that there's been plenty of times where I've closed out of trades early, and then minutes later it went in my direction. Give me an amen right now in the room if that's ever happened to you. You closed out of a trade, and wouldn't you know it, a couple minutes later, the market made you right. Give me some amens with exclamation points if it made you really frustrated. Yeah, exactly. So, you know, one of the big lessons in trading is to be patient, right? Just to allow it to happen. Because just like we waited for the criteria to show up, we got to wait for this thing to fulfill us. And you show up to the markets every single day asking for abundance. It's your job now because it's going to be delivered. You just got to sit back and allow. Now, let's take a look at something. I'm going to pause this. No, hold on. I'm going to pause this real quick. Let's take a look at the Segredo and ask ourselves, why did we get in this trade? I'm going to try to right-sided the edge of this thing. See, if you're on right side of the edge, you can see using the oscillator as well as what's going on up above here. This thing's been going in the direction for a while. These are 5-minute bars, since 7:15 and even earlier. This thing's been going up, up, up. And so as going up, you're getting real excited because you know it's coming, the perfect trade. Or if you're a gap closer, you know a gap close is coming up. I'm not a fan of gap closes on the euro or any of the currency for that matter. If I were a gap closer, I would do it on oil or something that fulfilled me quickly because I'm impatient and I like to have money quickly. It makes me feel good. Um, the reason we got into this trade was because we knew that this had been going up for a while. We knew it had already come and touched the 13 a couple times, but it was a red HMA. This trend is going down now. And remember when I said should see the silver moving average crossing the HMA? I like to see that. And in fact, I will wait for it uh, because we don't get paid in this business to ask or make the market do anything. We will only get paid to observe. And so I wait till I can see it happening and then I get in. So that's why we entered at 735. We got the blue Segredo with the red line with the red number, red HMA, matching red HMA, matching red HMA, and everything else. So we'll let this one play through. And by the way, now look at the stochastics. They are all going in the same direction. Sometimes they just don't do it how you want them to. And you can ask the screen a million times, but you get what you get. Patty, so yes, just to be clear, I knew this time thing would be confusing, and it's my fault. I'm sorry. On my Ninja charts, it's 7:35 Central Standard Time, and on the Segredo, I can't adjust it. Therefore, it's 8:35. Hope that clears it up. Now, also, not the fastest trade in the world, right? Sometimes it's going to fill you quickly, but sometimes it's not. Yeah, so as you can see here, this 13 is really a nice barrier, right? Now, so we've been in this trade for 3 minutes. Give me a show of hands as to how many of you would be nervous at this point. If you're live in this trade, it's been 3 minutes. It's gone towards the 3-tick mark, but I didn't touch it. Yeah. Yep. Yep. So just know that you can train yourself out of that through repetition, and you'll know, like, you'll just start to feel real comfortable with what you see and what you do, right? That's part of practice. That's part of mastery, doing what works over and over again. Question was, did I enter on the bid or the ask? I entered right at the price. Sylvia, if you've lost sound, try logging out and logging back in. So I'm going to speed this up a little bit. You'll want to know what else is holding this up. See the slant of the 50 on the 1-minute chart? That's holding it up. So you got a slanted 50. This was presenting some problems. And this guy's going to reject it too. He's going to kick it back. He's going to say, not yet. Sorry. Okay, so kind of a long trade, right? That was about, we entered at 7:35. It's 13 minutes and 40 seconds. Now, and there was quite a bit of fight going on right here. But the reason that this works is because of this. I'll show you. This has been going on for some time, and essentially on the 5 you have kind of a fan, right? The 50 is not over the 100, so it's not technically a fan, but this had been going in one direction for a while. It was going to exhaust. It hit this barrier, and it was bound to come back down. So there's a couple of good questions on entry and exit. Um, the easiest way for me to address that is, you know, if you're a counter trend trader and you want to enter on level 2, which I'll show you what level 2 is, this is a dome. Okay. Level 2, let's say that the price is trading right here. Level 2, and you're going short, level 2 would be 2 back from where the price is. And so conversely, if you were going long and you wanted to buy, that would be level 2 right there. That's a personal preference. Um, it works just as well. I mean, as you saw, the price went back and forth quite a bit. So, had I been patient, heck, I could have ordered 4 or 5 back and then allowed this to be my profit. Some of you are going to want to enter at level 1. As you saw, I just entered here. It took a little bit longer to fulfill. And then some of you are asking, why are you only going for 3 ticks? Honestly, because there's a couple different reasons. One, I'm kind of a scaredy cat. Two, I feel good when I look down and it says 37.50 and I'm out. And I know that if I were to increase the contracts, that's where the real money is. The one thing that's been ingrained in my head over the years is that, better to trade with more contracts than do more trades. And I totally understand the impulse of wanting to do multiple trades because I've been there. I mean, uh, gosh, when I used to do gap closes on oil, at the end of the day, sometimes I had 20 trades back when I worked for myself. I could trade during the day. Not a good idea. Not a good idea at all for me, right? But for some of you, you could do that and it's not exhausting. But I like 3 ticks. And when you have everything aligned, you can go for 6 ticks. Like I'm sure we can watch this thing and it'll continue to go further. I'm going to speed this up. And just watch the price action. If I would have gone for 6 ticks, essentially my exit would have been right around the 01 point. And I would have been, well, possibly. How many of you in a trade, you're you're trying to exit right where it's hitting and it's hit you 3 or 4 times, but it hasn't filled you? My gosh, totally frustrating when that happens, right? But here was the play, okay? The price action was going to cross all of these moving averages and eventually make it to the 100. And that was the play. And so now, essentially, once you've executed a successful trade, you sit and you wait. You wait for one of 2 things. For this MACD over here to either come back up and get back in sync with him or her, or this MACD to come down below and get in sync with the 1 minute. And then, of course, you'll want synchronicity between those two. Okay, someone asked me to move this. There we go. So yeah, right now I got to tell you on this trade in particular, I'm just going for 3 ticks because I'm real happy if I can do 2 trades with 3 ticks a day. Um, I, because I know that this trade's going to take a little while, I'm totally fine with waiting it out. At first, I wasn't. I was a nervous Nelly. Oftentimes, I'd close out at 1 tick, but I was still profitable. Um, so again, I guess what I would recommend for each of you is, um, and maybe we can cover this a little bit next week, where Melanie talks about psychological triggers. For some of you, um, there are psychological triggers that are hidden in your profit and targets. Meaning, some of you really should be going for 3. Like for myself, I would love to be able to hang on for 1 and let it rip for 20, but I'm just to show so that you can process as this is starting to show up. It's moving a little faster. And by the way, when I'm looking at this, I'm looking across, so I'm looking across. Does this match this yet? Match this yet? Does this match this yet? And then I'll go back and I'll look at my quant, which I suppose that I could minimize and put on the screen, but for the purposes of teaching you tonight, I'm just not at that point. So I'm just maximizing. And then I'm flat quant. So I'm looking for matchy-matchy on the charts, and then I come back and I look. Is this ready? Is this HMA? Because that's important. More is get this. I'm looking up here at my HMAs. Do I have matching the HMAs? This screen still hasn't shifted yet. Do I have matchy-matchy on the MACDs? There it goes. Do I have matchy-matchy on the stochastics? And I'm looking at my criteria on the sheet of paper next to my computer. And then I go back and I look at the Segredo quant. Now, so hopefully that helped for the person that wanted to see what my screen looks like. This is exactly what it looks like. D Cannon, want to encourage you to log in or log out and log back in if you're having sound problems. But let's take a consensus real quick. Let's do a sound check. If you can hear me well, please hit a yes or a Y. Okay, cool. Thank you very much. And hopefully everybody can see my screen still. Still a little echo. I'll work on that because that drives me crazy. It does. I would want my presenter to understand his or her controls and to use them effectively. All right, let me scroll back. When all y'all answered, it moved all the questions up, so I'm just moving them back. Thank you very much for the compliment. I appreciate that. I'm really having a good time, and I know that I'm going to get into a pattern with you as a group. We're gonna really start to gel. It's going to be a beautiful thing, so I'm looking forward to that. A few of you are asking for my email. Can't give that out. I promised Barbara that I wouldn't, and it's not that I don't want to communicate with you. I'm teaching this class because I want to communicate with you. However, I don't know that I could keep up with the traffic effectively and do a really good job, especially when I have my other job. So, tell you what, when I leave my job, I'll videotape it, we'll play it on here, and we'll celebrate together, and that'll be fun. And then we'll do the same for each and every one of you, and for those of you that have day jobs. But when I leave my job, then I'll give that information out, and we can really start to do some really funky stuff, because then I'll have my time back, if you will. Good question. Can you use a lower time frame with this strategy, such as a 3 minute rather than a 5 minute? I don't know. And I don't know because I haven't tested it, but I would say, the rules that I was given by my master, which is Barbara. There's a great book on mastery by George Leonard. I recommend all of you pick it up. It's such an easy read. One of the first steps to obtaining mastery is to pick a master, pick someone that you trust. So, Barb gave this to me. The only things that I changed were I put the numbers next to it and I changed the font. Barb likes that straight up whatever font that they give you on Notepad, and I changed it. But so I don't know if it works with a 3 minute, but you know what? I invite you to take this criteria and play around. But what she said is there's just a magic when the 1 and the 5 are in sync, and that's the whole crux of the trade. Someone says, this is a gap trade, isn't it? Well, yes, it is. It's a gap trade that continues on. It's a gap trade that turns into a reversal. Can you use the quant with ETFs and stocks? Um, I do know that that is the intention. However, I don't. Um, what I want you to do is shoot that question to this destination right here. Let me get there for you. Right here. Any of your questions about the quant? Does it work for ETFs? Does it work for stocks? Um, Feel free to submit a request, and then the support team will get back to you. So any questions about the quant, this is where those go. And then, of course, if you have any questions about the shadow trader side of things, that goes to shadowsupport@shadowtraders.com. Let's see. Can I please show the middle part of the notes? I can, yes. I'm going to move this, I'm going to center this for you. There you go. Okay, there you go. Michael, you're right. I don't do 11 contract trades, not yet. You're right. I wouldn't have a job. I wouldn't need a job. In fact, if I could probably leave my job at 10 contracts. I was just doing that was purely for, an example. I can't wait to trade 11 contracts. I can't wait to trade 111 contracts. I'll get there. So after 6 p.m., Robert, I trade just the 6J. I'm just real comfortable with it. You can trade the Aussie dollar, because that is during their market as well. However, I'm not in sync with it. I don't like how it moves, so I'm not as attracted to that one. Okay, so now let's go back for a second. Can everybody see, I guess, okay. Has everybody had an opportunity to get what they need from this window that's up right now from the rules? Just enter a Y. and we'll cover this again next week. Okay, good, good. Did everybody get to see what they needed from the quant? And keep in mind, I'm still very much a student of the quant myself, but I really like it. And again, the reason that I like it is because it's making things simpler for me. Next week, what I'm if I'm invited back, I should probably stop saying that because it's getting old, but um, I'd like to show you how we can just use the quant and enter trades, and I'll come up with a few examples. Good question. Do I look at the radar? Let me show you what the radar is. Okay, I already signed in. The question was, do I look at the radar at all, to determine entry? That's this right here, the Segredo radar. This is significant, however, I don't use it. Again, and it's perhaps you didn't get to hear this part, but Andrew, I'm really trying to simplify what I look at, and that's really just for myself because I was the guy that had the CT signals on there, and I had the tidal wave signals, and I had this and that, and one day Melanie just took out the wooden spoon, if you will, and said, if you don't use it, take it off your chart. And so I thought, okay, all right. Douglas, I agree with you. Maybe in time, yes, we will all just use the quants for all trades. In fact, in addition to teaching you how to use the shadow traders charts to enter trades and feel comfortable, I also want to do the same with the quant. So you'll see me start to build more and more of the quant in, and we may just have a whole class where we just enter trades via the quant to watch what happens, right? And that'll help us some repetition. We're going to do a lot of the perfect trade, um, and then sometimes we'll look at the ninja charts. But wouldn't it be cool? This quant here, this is web-based. So if you're like me and you're at your cube and you're working, and you've got your 5 minute. We'll just look at the again, and let's say it's daytime, and I got this up. And when something cool like this shows up, which let me move this so you can see why it's great. This one or this one here. Well, I would still have to download Ninja because I've got to have somewhere to enter my trade. But I could pull up my Dome while I'm still at my desk, turn all my sound off, and ding, enter a trade. Right? So, yeah, ideally, wouldn't it be cool if we could all just be trading off of the quant? Question, do you need to use the 15-minute for the perfect trade? You can if you want to for matchy-matchy purposes. I don't because my master showed me a rule of and the 5. So I may check, but I've tried to, again, keep it simple for myself. What about 1940 or so where the numbers are green? 1940. Right here. That is, if I were right side of the edge, I may take this entry, right? But again, it would depend on what my chart looked like. If I had matchy-matchy on the stows, if I had matchy-matchy on the MACD, if I had matchy-matchy on the HMAs, on both the 1 and the 5, I may take it. Oscar, you've asked this question times. I'm sorry, I'm not ignoring you. Let's take a look at what my settings are for the. So Oscar's asking me, are your settings on the HMA color change set to calculate bar close false on both charts? Let's look. Yes. So what I've done on one, I've done on the other. So the settings are identical on my 1-minute chart. Oscar, I hope that helps. All right. Man, it's already 8:30. I got to tell you guys, it's a whole lot different when you're on this side of the screen. I was going to start and ask everybody who made money today, but I didn't want y'all to think that I was trying to be a copycat. I do look forward to hearing of the day when all of you are reaching your financials as a result of you staying on the path, being willing to trade one more time, even in a loss, uh, being focused more on the possibilities of success rather than the fear of failure. These things are important because, again, you won't get help out there. They don't know what you're doing. But with this group, you've got support. You can call someone up and say, look, this is how I feel. And they're going to say, look, you can do this. You can absolutely do this. Guys, I really appreciate these compliments. It makes me feel really good. I am having a great time sharing this with you. I'm looking forward to getting into a rhythm with you. Pretty soon we'll be able to do the waltz together. And I'll be zipping through these screens. We'll be uploading, downloading stuff, and you know, um, I'll be at conscious or unconscious competence in no time. So, you know, with that, I'm going to end off. And I'm going to end off by saying this. I want to commend each and every one of you for showing up and honoring your commitment to your purpose for trading tonight. If you showed up tonight, you told the universe, I'm in business and I ain't backing off. I'm a learner and I'm coming to get it. And so, um, you know, I just encourage each of you to show up next week and keep showing up. And when it's your turn to extend a tow line to help, that you leap at that. There's a karmic principle that says, in order to achieve what you want, you help someone else do that first. And I've seen that in action, in practice, and it does work. All of you have been very patient with me. I appreciate it. Next week will be a little bit better in terms of how fluid I am with the charts and everything. Next week we'll talk about doing what the old phrase from the South: "If it ain't broke, don't fix it." You know, and maybe I'll share with you what happened to me in January of 2011 and 2012 when I broke that rule. So with that, I just want to share with you how grateful I am for you allowing me to have this experience, and I will see each and every one of you next week. Bring your questions. Have a good night.